Hello friends, today we're going to be talking about what is a land contract. Have you ever heard the term land contract? What is a land contract? Well, by the end of this video, you're going to have a deep understanding of what a land contract is. And by having this knowledge, it'll enable you to bypass some of the traditional mortgage routes and tailor transactions that specifically fit your financial needs. So how does a land contract differ from conventional buying methods? And what unique advantages does it offer to both the buyers and the sellers? Well, stay with me as I explain land contracts. Next, I'll talk about the strategy that is most commonly utilized with land contracts. And last but not least, I'll explain to you how land contracts can benefit you as a real estate investor. If you're ready, let's go. So a land contract is a legal agreement for a seller-financed purchase that does not involve traditional financing of a bank or any other type of mortgage lender. Instead, the buyer makes monthly or periodic payments to the seller until the property is paid in full. A land contract is sometimes called a contract for deed or a bond for title. So what is the angle for you as a buyer if you wanted to utilize a land contract? Well, it's definitely an alternative financing model for a buyer who maybe cannot secure traditional financing, but they do want to own a home and buy a home. Or those whose credit has been damaged by a short sale or foreclosure may be able to utilize a land contract to actually buy a home. And it also might be an option for people who do not have enough money saved up for a down payment or have enough money saved up for the closing cost or all of that combined. This can be a great option for that. Now, just to touch on this, traditionally when somebody goes through a short sale or a foreclosure, something might go on their credit that doesn't allow them to get a loan with traditional financing for a long period of time. So if somebody wanted to go out and buy a home, utilizing a land contract allows them to purchase a home through a non-traditional seller financing model that doesn't involve banks. So how do these land contracts work? Because there's no traditional lender and no loan-related fees or closing costs, a land contract is faster and cheaper than a traditional mortgage, which most people use. And because there's no bank involved, the buyer and seller negotiate all of the terms. Everything from the purchase price to the interest rate to the cadence in which the payment is made, and also the down payment and a balloon payment if necessary. And what's a balloon payment? A balloon payment is a payment where you pay off the entire loan in its entirety at some point in the future. Sometimes there might be a balloon payment after 5 years, 10 years, 15 years. That can all be negotiated in this land contract deal. And also because this is a legal binding contract, the buyer is responsible for the taxes, insurance, and maintenance and repairs. They own the home. But there are some important caveats to understand regarding this, which I'll jump into. And this is where it really gets interesting. In a traditional land contract, the seller retains legal ownership of the property. Now there's something called a wraparound mortgage or a wraparound land contract, and that would be for a seller financing model where if I owned a home and I had a mortgage and I was going to sell the home and somebody was going to buy the home from me, they would pay me the mortgage payment. I would take that mortgage payment and I would wrap it around and pay the mortgage company who then I owe money to. So they pay me and then I pay the mortgage company. However, in something called a wraparound land contract, the buyer immediately gains ownership through a warranty deed. In this case, the seller continues to pay their existing mortgage and keeps the difference between the mortgage that they're paying and the money that they're receiving. So what strategy in real estate would you utilize land contracts for? Is there a strategy that's more prevalent than others? There is, and the one that I've seen that works really well for this is something called a slow flip. So what is a slow flip? So a slow flip is where you are able to purchase a piece of property, and in the model that I've been utilizing, it's cheap real estate, definitely below $100,000, but I'm negotiating and getting the home at a very low price. Once I've got the home secured and under contract for a low price, I have a private money lender borrow me money, hopefully between 8 to 10%, sometimes it's a little bit higher than that, and I purchase the home with cash. That gives me some negotiating power to get the price low. Once I have the home, I am paying back the money that I borrowed from the hard money lender within 5 to 7 years. Now, I will sell this home, right, because I own the home. The private money lender has a lien on the home, but I own the home, and I will then sell that home utilizing a land contract to somebody who maybe can't get traditional financing, and they're going to buy that home from me. We'll execute it with a land contract, and I will finance that land contract to them over the course of 30 years. So in this strategy, because interest rates are a little bit higher from the private money lender, but I've got the home at a low price, I'm turning around and selling that home at typically 40 or 50% higher than what I bought it for. Then I also charge a little bit higher interest rate than normal lending will allow, and they're not coming in with any money, and I am financing it over that 30-year period of time. And I'm trying to get those mortgage payments, the one I received from the person I'm selling to, and the money that's going out to the private money lender, to make sure that this is lower than the payment I'm receiving. And it won't be by much. And so this isn't something where you make a ton of money every single month, but when that mortgage is paid off to the private money lender within 5 to 7 years, I then have that entire monthly payment coming in on a seller finance deal for the course of the next, say, 22 to 25 years. So a slow flip is an amazing strategy when you utilize a land contract. Land contract, broken down simply, allows you to be a landlord without any of the landlord responsibilities. So the buyer is responsible for taxes, insurance, maintenance, and all the bills, all the utilities. But if they do not make payments to you as the owner, as the landlord, you can evict them without going through a foreclosure process. So how does a land contract benefit you as a seller? Well, number one, it gives you a lot of flexibility as the seller. You negotiate the price, the interest rate, the cadence in which the mortgage payment is made. And because it's a seller financing model, and it's a model that's allowing the buyer to get in that typically can't get traditional financing, you can charge more of an interest rate in doing so. And also a little bit higher price, so you can pull in more income. And the other thing, as I mentioned, that is really beneficial to the seller, if the buyer defaults on payments, you can evict the buyer out of the home without going through the foreclosure process. So it is an amazing tool to be able to safeguard you as a seller. Another benefit to the seller is they're able to make their installment payments on the money they've borrowed with the buyer's installment payments that come in. Now, there's many benefits. There's a lot of intricacies when it comes to land contracts, but these are the benefits, and this is a strategy that I've seen work really well with land contracts. But I'd be interested in your feedback. What have you seen about land contracts? What strategies have you utilized them with? Or what strategies have you heard that they've been utilized with? So please comment below. Let's engage in a dialogue. And as always, just for stopping by, I've got a free gift for you. It's on this link below, aaronsfreetraining.com. It's a short-term rental calculator. You input the purchase price, the income, the expenses, and it will actually do all the work for you, spitting out whether it's a good deal or not to buy a home. And once again, thanks for stopping by. Have an amazing day.